While crypto allows the world to get rid of banks, a bank will still very much be necessary for this powerful tech to reach the masses. As we laid out in our previous series, Crypto Powered, we believe a crypto-native company will ultimately become the bank of the future. Now, we're confident Genesis Block will have a seat at that table, but we are not the only game in town. In the first episode of this new series, Crypto Banking Wars, we did an analysis of big crypto exchanges like Coinbase and Binance. And in our second episode, we looked at the world of non-custodial crypto wallets. Today, we're analyzing crypto lending and borrowing services. The earn and borrow use case cover a lot of what traditional banks deliver today. This category of companies is a threat worth analyzing. So as we look at this market, we'll mostly be focused on custodial centralized products like BlockFi, Nexo, and Celsius. Many of these companies found early traction among crypto users. Are they capable of bundling more financial services and winning the broader consumer finance market? Let's find out. Now, before we start talking about companies, let's just give an overview and some context. Because speculation and trading remains one of the most popular use cases of crypto, a new crypto sub-industry around credit has emerged, and much of the borrowing demand has been driven by institutional needs. For example, a Bitcoin mining company out of Asia might need to borrow cash to pay for operational expenses like salaries or electricity. Or a crypto company, one that did an ICO that's crypto rich, might need to borrow cash to pay for engineering salaries. Or a crypto hedge fund needs to borrow for leverage or to take a specific market position. While all of these companies have sufficient crypto to cover the costs, they might not want to sell it, either for tax reasons or just speculative reasons. They may believe these crypto assets will appreciate, as with most in the industry. So instead of selling their crypto, these companies can use their crypto as collateral for loans. For example, they could provide $150,000 in Bitcoin as collateral, and they could borrow $100,000. Given the collateralization that's happening, the underwriting process becomes very straightforward. Companies all over the world can participate, and language and cultural barriers are removed. The leader and one of our partners in this space is Genesis Capital. While they are always the counterparty for both lenders and borrowers, they are effectively a broker. They are at the center of this institutional crypto lending and borrowing market. Their total active loans as of March 2020 was 649 million. And that number shot up to 1.42 billion in active loans as of June 2020. The growth of this entire market segment is impressive, and it's what's driving this opportunity for consumers downstream. While most of the borrowing demand comes from institutional players, there is a growing desire from consumers to participate on the supply side of the market. Crypto consumers would love to be able to deposit their assets with the service and watch it grow. Why let crypto assets sit on an exchange or in cold storage when it can be earning interest? So a number of consumer-facing products have emerged in the last few years to make this possible. While they also allow users to borrow, always with collateral, most of the consumer attraction, the consumer appeal, is around growing crypto even while you sleep, earning interest. These products usually partner with institutional players like Genesis Capital to match the deposits with borrowing demand. And it's exactly part of our strategy at Genesis Block beyond what we're doing with DeFi, decentralized finance. A few of the most popular consumer services in this category include BlockFi, Nexo, and Celsius. So let's start talking about a few of those. BlockFi is the leader in this category, at least in the West. They are well capitalized. In August 2019, they raised $18.3 million in their Series A, and in February of 2020, they raised $30 million in their Series B. And in that same time period, they went from $250 million in assets under management to $650 million. In a recent blog post, they announced that they saw a 100% revenue increase in Q2 and that they were on track to do $50 million in revenue this year. Their growth is impressive. BlockFi did not do an ICO, unlike Celsius, Nexo, Salt, and Cred. BlockFi has a lot of institutional backers, so it's perceived as very reputable in the space. BlockFi started with borrowing, allowing users to leverage their crypto as collateral to take out loans against it. They later got into earning, allowing users to deposit assets and earn interest on it. And they recently expanded their service to exchange functionality and say they're coming out with a credit card later this year. It's incredible that BlockFi has been able to see such strong growth despite their numerous and well-documented product and security woes. A few months ago, their systems were compromised. A hacker was able to access confidential account information, such as names, dates of birth, postal addresses, activity history, and balances. While no funds were stolen, this was a massive embarrassment and caused a lot of reputational damage. In a separate incident earlier this year, a user discovered a major bug that allowed him to send the same funds to himself over and over and over again, ultimately accumulating more than $1 million in his BlockFi account. Now, lucky for BlockFi, they caught him just before he ran off with millions of dollars. Beyond their poor security, which in fairness to them, based on their hiring, they seem to be taking more seriously now, their products are notoriously buggy and hard to use. I borrowed from them a year and a half ago, and I've used their interest-earning product up until very recently. I have firsthand experience of how painful their product is. But don't take my word for it. Here are just a few recent tweets from their own customers. Jacked up app, ain't working. It hasn't been user-friendly. Oof, guys, Face ID please. Not worth using if I have to log in every time. In case you miss, your app doesn't work. The app is a horrific user experience. The app needs more user-friendliness. Trading is a nightmare. So reading the comments, it looks like the app has a lot of bugs. Can't get past the login screen. That's some pretty bad UX, I would say. Look, it's just really hard to trust a financial product that is this buggy. For a while, their interest-earning product had a completely different authentication system than their loan product. So users had two sets of usernames and passwords. And many people have complained about issues with withdrawals. The app is constantly logging people out, weird blank screens, ugly error messages, emails with verification codes that are delayed by hours, if not days. I do wonder if their entire app has been outsourced. The sloppiness just really shines through. Not only is their product buggy and UX confusing, but their branding is weak, to say the least. This is a t-shirt they once sent me, and I appreciate the gift, but it looks like they just found a bunch of quirky fonts, added their name, and slapped it on a t-shirt. To the innocent bystander, many of these issues seem totally fixable. They could hire an amazing design agency to completely revamp their brand. They could hire a rockstar group of engineering consultants to fix their bugs. And while it could stop the bleeding for a time, it may not solve the underlying issues. Years of sloppy product execution represent something much more destructive. It represents a top-down mentality that shipping anything other than excellence is okay. That product experience doesn't matter. That design doesn't matter. That craftsmanship, strong execution, precision doesn't matter. And that's very different from our culture at Genesis Block, and I shared some thoughts in a blog post a few weeks ago. This cancerous mentality that I think permeates the BlockFi culture rarely stays contained within product and engineering. This leaks to all parts of the organization. No design agency or consulting firm will fix some of the pernicious values of a company's soul. These are deeper issues that only leadership can course correct. If BlockFi's sloppiness were due to constant experimentation, iteration, shipping, or some sort of move fast and break things hacker culture like Binance, I'd probably cut them way more slack. But there is zero evidence of that. Move fast and break things is always scary when dealing with financial products, but in BlockFi's case, when it's more like move slow and break things, they are really playing with fire. Next time a massive security breach occurs, like what happened earlier this year, they may not be so lucky. Based on who is on BlockFi's team, their poor product execution shouldn't be a surprise to anyone. Their team comes mostly from Wall Street, not the blockchain community where our roots are. Most of BlockFi's blockchain crypto integration is very superficial. They take crypto assets as deposits. That's it. They aren't leveraging any of the exciting low-level DeFi protocols like we are. While their Wall Street heritage isn't doing them any favors on the product and tech side, it has served them well on winning institutional clients, and this is perhaps their greatest strength. BlockFi has a very strong institutional business. They recently brought on Three Arrows Capital as a strategic investor, and they're a crypto hedge fund who does a lot of borrowing. And in that announcement, BlockFi's founder said that bringing them on, quote, aligns well with our focus on international expansion of our institutional services offering. They also recently brought on someone who will lead business development in Asia among institutional clients. So is BlockFi a competitor to Genesis Block? There are certainly features that overlap with our offering, and it's possible that they're angling to become the bank of the future like we are. However, they simply have not proven that they're capable of designing, building, and launching world-class consumer products. They've had issue after issue around their security and their poor product execution. Unrelated, their company account, their Twitter account, and their founder's Twitter account seem to only tweet about Bitcoin. Are they Bitcoin maximalists? I don't think they understand, appreciate, or value the power of DeFi, decentralized finance. It's unlikely they'll be leveraging it anytime soon. So all of these reasons are why I don't see them as a serious threat to Genesis Block. However, because of their strong institutional offering, I hope that Genesis Block will ultimately have a very collaborative and productive partnership with them. Assuming they figure out their security woes, we could park some of our funds with BlockFi, just as we will with Genesis Capital and others. I think what's likely to happen is that we'll corner the consumer market and we'll work closely with BlockFi on the institutional side. I've been hard on BlockFi today because I care. I think they have a great opportunity at helping elevate the entire industry in a positive way. But they have a lot of issues they need to work through. I really don't want to see users lose millions of dollars in a security breach. It could set back the entire industry. But if they do things well, a rising tide lifts all boats. Let's briefly mention a few other companies in the space. Celsius, they raised $50 million in an ICO, and they're led by serial entrepreneur Alex Mashinsky. I've met him, he's a nice guy. Similar to Binance, their biggest Achilles heel could be their own token. There are also a lot of unanswered questions about where their deposits go. They don't have a record of great transparency. They recently did a public crowd raise, which is a little odd given their large ICO, as well as their supposed $1 billion in deposits. Are they running out of money, as some suggest? It's unclear. One of their biggest blind spots right now is that Mashinsky does not understand the power of DeFi. He's frequently openly criticizing it on Twitter. Nexo is another similar service. They are European-based. They've been trying to launch their own card for a long time. They've been saying it's coming forever, still haven't shipped it. And they have a history in the payments and fintech space. Because they haven't penetrated the US, which is much harder regulatory nut to crack, they're unlikely to be as competitive as BlockFi. There were also allegations that Nexo was spreading FUD about Chainlink while simultaneously partnering with them. Did Nexo take out a short position and start spreading rumors? I don't know. There's never a dull moment in crypto. Other players in the lending and borrowing space include Unchained Capital, Cred, and Salt. While many companies in this category seem to be slowly adding more financial services, I don't believe any of them are focused on the broader consumer market like we are. To use services like BlockFi, Nexo, or Celsius, users need to be onboarded and educated on how crypto works. At Genesis Block, we don't believe that's the winning approach. We think blockchain complexity should be abstracted away from the end user. We did an entire series about this called Spreading Crypto. For many of these services, there is additional friction due to ICO tokens that are forcefully integrated into the product. See Nexo token or Cell token. None of these services have true banking functionality or integration with traditional finance like we do. For example, easy off-ramp or spending methods like a debit card program. None of these services are taking DeFi seriously. They are leveraging crypto only for the asset class, not the underlying technology around powerful financial protocols. So are these companies potential competitors to Genesis Block? For the crypto crowd, yes. But for the mass market, no. None of these companies are capable of reaching the billions of people around the world that we hope to reach at Genesis Block. Thanks for tuning in today. Our next episode will continue with this series, Crypto Banking Wars. We'll be looking at a few companies that are doing crypto debit cards. Are they capable of bundling more financial services and winning the broader consumer finance market? Well, next episode you can find out. Go to genesisblock.com/follow to find links to our social channels so you don't miss any upcoming episodes. And if you're watching this on YouTube, you know the drill. Smash that subscribe button right over in that corner where the logo is. Thanks again, and we'll see you next time.